Hello, guys. Are you guys online? Hello. Hello, everybody. Okay. Now, I think there is let's give it a little bit of time for people to stream in, okay? Because there is a little bit of time delay. Can you tell me if the link is actually working? Hello, hey guys. If you can hear me, can you all type where are you tuning in from? Because I'm definitely not in Singapore now. So if you guys, whichever part of the world that you are tuning in from, can you all type it in the chat, okay, where you guys are tuning in from? Where are you guys tuning in from? Okay, let's see if this is working. Okay. This is very interesting. Facebook has changed its hold on guys. Facebook has actually changed its algorithm and layout and all that. So some people can't actually find this. Okay, just give me a moment, okay? Just give me a minute and then we will start. In the meantime, okay, while you guys wait for me to okay, good. Guys, it's very, very important because there's a lot of contradicting things that's going on in the market right now. So can you guys first help by liking and sharing this video so that we can bump it up and more people can join us in this learning today? Okay, so once you have helped to like and share, can you guys put LNS in the chat? Okay, you guys have to help me with this because Facebook actually revamped its entire algorithm and it's very, very difficult for people to actually find this Facebook Live. People are pinging me that they can't actually find. And I just realized that there are 3 steps, before you can even come and join this Facebook Live. Okay, so can you help to like and share this Facebook video on your own Facebook page, all right, and make it public so that more people can join us in this learning because what I'm going to cover tonight is very, very important. Okay, so thanks everybody for your support and also thanks for helping to make this more accessible to people. Okay, so in the meantime, while you do that, just want to say warm welcome to people who just joined. Today we are going to talk about what's happening in the stock market and whether whether the S&P 500 all-time highs is being sustained by what's actually going on in the economy. Okay, so let me just share my screen. Okay, here we go. Okay, so pardon a little bit of a lag. Okay, good. Okay, great. You guys can see my screen, right? Okay, fantastic. Now, once again, everybody do help by liking and sharing this video because, as I've mentioned just now, Facebook has severely changed, drastically changed its user experience, the algorithms, etc. And it's very, very difficult for people to actually find this Facebook Live. Like there are 3 or 4 different clicks, that people actually have to click through. Okay, so very, very importantly, today there's a lot for us to cover. There's crazy tariffs, right? Geopolitical tensions, signs of recession, and then the expected September effect. And the question is, would we expect more market chaos where now as the S&P 500 is not reacting as it is probably expected to, right? It has hit all-time highs. So some of the questions that we are going to cover today, number one, why does the market seem to be shrugging off all these global tensions that's happening? Number two, any hidden signals, hidden signs that you should be watching out for beyond all the headlines, that's splattering in your face? And also, how do you stay calm and spot opportunities in this current market and what I'm actually doing, okay? So before we start, let's do a little pulse. Okay, a pulse check. I know I've done it in my Telegram chat. For people who are not yet in my Telegram chat, this is where I give my most updated market updates, my insights. Okay, so if you are not already in my Telegram chat, you want to join that. All right, it's in the ticker, it's in the scroll below. Okay, so let's do a little pulse check. How many of you are feeling A, very happy, bullish, the market is bullish? B, you are sobbing, for whatever reason, you are tossed and turned in the market waves, you have lost some money. C, okay, you are anxious and confused in what's happening in the market. And D, you're sleeping peacefully through the market. So can we do a little pulse check and see how are you guys feeling right now in this current market? Hey guys. Okay, I want you all to be responding, all right? And then we will move along from here. Okay, so just type inside the chat, all right? WK says D, good, sleeping peacefully. Gary says C, yeah, confused and anxious. Thank you, Gary, for being honest. Anyone else? Anyone else? How do you all feel in the current market right now? Okay, and there is no shame. Okay, whether you are A, B, C, or D. Okay, so you just want to see, let's just do a little pulse check. Now, what do you all think? Where do you think the current market valuation stands today? And by current market valuation, we use the quote unquote Buffett indicator, which is what Warren Buffett says is the best market indicator, market valuation indicator that he himself uses, right, in determining how much cash to be holding and how much percentage of his BRK to be vesting. Okay, so where do you think the market valuation stands today? Do you think the market valuation stands at significantly overvalued, modestly overvalued, fair value, modestly undervalued, or significantly undervalued? Can you now type it in the chat? Overvalued type O, fair value type F, right? Undervalued type U. Okay? So, is it overvalued? Is it fairly valued? Or is it undervalued? Guys, what do you all think? Before I share with you guys, okay? On what's going on. So what do you think? Is it overvalued, fairly valued, or undervalued? It is? Okay, let me show you guys, huh? Okay, WK says fairly valued. Anyone else? What do you all think? What do you guys think? Ellen says overvalued. Anyone else? Justin says significantly overvalued. Okay? Yeah, fantastic. Look at this. It is astronomically overvalued, guys. This is super, super insane. Okay, so when we look at this, right, meaning total market cap over GDP is actually the actual monetary value of all the goods and services that are being transacted in the US market, right? And this is the total market cap, which is what people are predicting into the future. So these are just different thresholds at which Warren Buffett uses, okay, to say whether, like, at what level of market valuation we are standing at. And right now we are at astronomically high valuations. It is super crazy. We are here, 213. Okay, it's been all-time highs. Just warning, a little bit of a caution, okay? When COVID crashed, right? When the market crashed, when the market crashed in 2020 at COVID levels, it was at modestly overvalued, okay, 140. And in 2022, when the market also had a sharp correction, it was actually at 170 something. Okay, it was at 170 something, but today it's sitting at 213, guys. And I just want to ask you guys, do you think that the underlying economy itself, whatever is going on and the forecast that's ahead, do you think this actually supports the market? Because at the end of the day, the stock market is the future. It's kind of like a predictor, right, of the economy, right? So the actual economy is kind of like lagging, and then the stock market predicts, right? But do you think that this prediction, this forecast, actually it is supported by the underlying economy? Do you all think it is? If you think that it's supported, type S. If you think it's not actually supported, type no. How many of you actually think that it is supported? Yeah, you guys are like, oof, right? How many of you think that it's actually supported by the market? Can you all type S if you think it's supported, and type O if you no, type no, or type a X, okay, if it's not supported, and type a S if you think it's supported by the real economy. Do you think these market valuations are actually supported by the real economy, guys? Yes or no? Type it in the chat. Okay, Zen says no. Hey, Zen. Hi. Yeah. YK says X. No. Anyone else? Sherry says no. Anyone else? Anyone else, guys? Justin says no. Okay, let's have a look. All right, let's have a look with hard data. With hard data. That's very, very important. Okay, so look. Labor markets. Okay? This quarter, the past 3 months, the job market has been at its lowest ever since 2020, ever since the pandemic. Okay, and unemployment rates have now risen to 4.2%. All right, and we are basically short. I mean, just in July, we are short of 42K jobs shortfall, okay, of what was supposed to be created in the market. And economists are also expecting it to continue slowing down because hiring across a vast majority of industries have been weakened. Why? Due to high uncertainty over Trump's volatile trade policy and the shifting tariff rates, right? So employers are really putting their growth plans on a hold because the tariffs really do shake up businesses, especially when it comes to business cost, right? Really spiking up business cost. The next indicator, market indicator or economic indicator that we want to look at is also what we call the Purchasing Managers Index, the PMI. It is a measure of the prevailing direction of economic trends, okay? This is in the manufacturing industries, 19 manufacturing industries, right? And this PMI takes into consideration GDP, inflation, exports, etc. How we read it is that if it's above 50, is expected, right? Economy is expected to expand. If it's below 50, is expected to contract. So what we see is that the demand has stagnated, right? Tariff uncertainties dominate the industry. Not just that. So initially, you can see, right, actually, what happened in May and June. Remember the tariffs were announced here. And then May and June itself, right, the companies were trying to preload all this inventory, right, trying to front load to avoid the tariffs. But now it has, boom, gone back down, okay, because there's too much uncertainty. So demand has stagnated, international sales have fallen, inventory control also deteriorating. All right, so there's actually a contraction, I expect a contraction in the future. When we look at services, so that's manufacturing, right? But this is services, okay? So services, we are talking about, for example, accommodation, education, finance, insurance, healthcare, all right, professional services, real estate, transportation, etc., utilities. Okay, so services PMI, on the other hand, what you see is that it has increased. Okay, now this is actually meant to be a good sign, right? It's meant to be a good sign. So this is actually meant to be bad sign. Boo. Okay? And this is meant to be a good sign. However, do you really think that this is a good sign? Do you really think that it is purely driven by demand, guys? Do you think that this services PMI, managers index, is purely driven by an increase in demand? Yes or no? The answer is, what is it? The answer is a resounding no. No. Why? Because what has happened is tariff retaliations, right? Cost has risen. Service companies raise their prices. Okay, so there's input inflation. And then what they do is that they pass it on to customers, right? So prices increase, and therefore this number is likely inflated and not just purely driven by demand. Although we could also say that demand has risen. Okay, so this overall becomes kind of like a neutral indicator. Understand? So if we put it all together in the total PMI, okay, so what we call composite PMI, the manufacturing plus the services, we can see that okay, overall it's increased, but this is actually pushed up by the services, right? By the services sector. Okay, and we have to ask ourselves, okay, what other indicators in the economy actually shows that there is going to be expansion or contraction? Now, let's have a look. What else do you all think is important? So this is from the business expectation side, right? Business expectations in terms of the demand and how it's going to meet demand. But in terms of the real consumer spending, right? You guys can see overall it has fallen. Okay, the growth, right? It's weakening. Consumer spending is weakening. And not just that, consumer spending weakening, we know that inflation, right, is kicking in again. Why? Because of all these tariffs, right? Things are getting more expensive. So when we piece all this together, what is it? It is classic stagflation indicators, okay? Potential. All these are classic. So when we piece it together, slowing growth, mixed PMI readings, weak job reports, inflation, right? Cooling consumer spending, and then tariffs remain elevated. Okay? So then the question, guys, what is driving the market? What do you all think is driving the market? Can you all key it in the chat? What do you all think is driving the market? Okay? And once again, those of you who just joined, today's market updates are very, very important. And Facebook has changed its user experience and algorithms to make it very difficult to find this Facebook Live. So can y'all help me by liking and sharing? Okay, a lot of effort, time has been put behind this just to share with you guys and to really give you all insights. So we want as many people to join and learn. So help to like and share this video to boost it up. All right. So if y'all can do that favor, help to like and share. And once you guys have done that, can you also just type in the chat, because we want this to be interactive, right? What do you think is then driving the markets? You know what we're seeing is kind of like a stagflation sort of situation. But what do you think is then driving the stock market upwards? What do you think? What do you think are pushing the stock market upwards? Anybody? YK, WK, Alan, Gary, Justin, Zen, Cerise. Anyone else? Okay, what do you think is driving? What would you guys think are the factors that are driving the market upwards? Any takers? There's no right or wrong. There is only learning. Okay, all right. AJ says AI. Anyone else? Good try. Anyone else? What else is driving the market? Very good. You guys are very good. Okay. Anyone else? What else? Some say AI, potential Fed rate cuts. Anyone else? Potential pricing in September rate cuts. Anyone else? Hey, hello, Louis. Good to see you. Okay. Anyone else? Yeah. Expectations. Very good. Anyone else? Any takers? Okay. We are here to all learn together, right? Okay. So, you guys can continue to type it in the chat, okay? But what is driving the markets, right? This is so crazy. Just look at this, okay? This is basically what we saw just now. Instead of S&P 500, this is the Wilshire 5000, okay? The GDP ratio. Can you see? The ratio has just gone like woof, sky high. It's firstly driven by market sentiments. Boom, greed, greed. Okay, guys, this is so important. Do you know just like 2 months ago it was here? Just 2 months ago, it was at fear, red. But now it has bounced back to greed. And what does Warren Buffett say? Guys, his most famous quote, what does Warren Buffett say? When, right? Be fearful when others are greedy and greedy when others are fearful. Do you think that Warren Buffett, and his team, do you think they're sitting on a lot of cash right now or very little cash right now at this point in time? Do you think he's sitting on a lot of cash or is he sitting on very little cash? They're actually sitting on a lot of cash, okay? Nearly record high amounts of cash. Because it's precisely when people are greedy, you really want to be a little bit fearful. Okay? Not being fearmongers, but you want to be cautious. Anything else? What you all said just now is very true. Okay, yeah, exactly, right? Lewis is saying Justin says sitting on record cash. Exactly, right? Okay. Now, look, just now a few of you also talk about expectations for rate cuts. For sure, it is almost nearly certain. So initially what has happened was that Fed was, it was 50-50, right, about the September rate cuts. But now we have a nearly full chance of a rate cut coming next month, okay? So this then comes into play, right? People are expecting, or the market is pricing in this expectation. So when the interest rates go down, borrowing costs go down, right? Borrowing costs go down, it means that there can be more spending. It fuels more spending, and it also fuels more investments, right? From the businesses as well to be driving their growth. Okay, so then it tries to spur the economy. Okay, so investors or speculators are actually trying to price in this rate cuts. All right. Not only that, what else? Okay, look at this. It's so crazy. Now, guys, our incredulous Trump, after putting in all this 10, 20, 25, 50%, 100% tariffs, what do you think has happened to the economy of the United States for now? Okay, for now. Because I can tell you this is only for now. What do you think has happened? Ta-da! Tariff revenues are up nearly 20 billion per month. Can you see this huge spike? Okay? So they're very happy. Suddenly there's an inflow of money that's coming into the US economy. But do you guys think that this is sustainable or not? If you guys think this is sustainable, type S for sustainable. If you think this is not sustainable, type X for no. Do you think this is sustainable or not? 20 billion per month. All these crazy tariffs that is coming in at one shot. Tariff revenues. Do you all think it's sustainable or not? Okay, and this is what investors are also thinking, right? Speculators. Stablecoin. Okay. Anything else? Do you all think it's sustainable? Guys? By the way, the USD is no longer just the only currency in the bucket that is considered a safe haven. No longer. Okay? It could potentially weaken even further. Alright? So, do you all think it's sustainable, guys? Do you all think this is sustainable? The answer is, of course not. Of course not. What do you think is going to happen? Trade war, right? Retaliation. When people stop importing all these US goods, what's going to happen to the GDP? Of course, it's going to fall. Boom. We just haven't seen it yet. Okay? So this is something that y'all want to take note of. Anything else? Now, also another question. what is propping up the S&P 500? Do you think all the companies and all, do you think all the companies are propping up the S&P 500? Yes or no? Or do you think only a selected sector? Right? Do you think all type all, or do you think very few type few sectors or few companies are propping up the S&P 500? Yeah, Tianhua says rising at expense of US inflation. Um, yes, yes, yes and no. Okay, yes and no, because then the interest rates also come into play, right? Yeah, Louis says few. This is being propped up by few companies. Look at this. All right. Actually, only three sectors: communication service, information technology, and financials. Okay, in the Q2 earnings. All right. All the other sectors, 0 to negative growth. That means it's actually contracting. If we break it down further, okay, into the different indices, just have a little look. Okay, so this is Nasdaq 100, right? Obviously, this is S&P 500, which is propped up by the Nasdaq 100. Okay, and actually within the Nasdaq 100, it's only the top 10 stocks that is pushing up the S&P 500 concentration. Record 40% in July 2025. Okay, guys? So, this is, you must really note that this current propping of the market is only supported by the top 10 stocks. Okay? And what do you guys think? What do you guys think? It's supported by only the top 10 stocks. Do you think the top 10 stocks is the real reflection of the economy? All right. So that means, now what does that mean, right? I've given you a lot of data, but what is the so what over here? Something that I keep telling my mentees. I keep asking my mentees, what is the so what? The so what is that it becomes highly important for you to be selecting the right strong companies to be putting into your portfolio. You cannot be, just blindly closing your eyes and throwing your money into this and that. Okay, because it's not the entire economy that's growing. All right, it's actually very, very few selected sectors. Okay, as I've shown you just now. So then the question is, what am I doing in the markets now? Guys, if you want to know what am I doing in the markets right now, can you type in the chat, ROI. Okay, type in the chat ROI if you want to know what I am doing in the markets right now. Because given all these mixed signals, right? Mixed signals in the market, you want to be very careful. Just now, for those of you who just joined, we went through what is propping up the economy, the mixed signals from the macroeconomic standpoint. We went through market valuation. We went through unemployment rates, PMI. What else did we go through, guys? We went through consumer spending, right? We went through inflation rates. We went through interest rates, etc. So, guys, if you want to know what I'm doing in the market right now, because you absolutely cannot be random in this stage. The stock market is only being propped up by 10 stocks, which means that your portfolio, you must be very selective, okay? If you want to know what I'm doing in the market right now, type ROI before I move on. Only Ellen wants to know. Okay. Now a little bit of a shout out over here. Okay, a little bit of a shout out. And just 1 minute, okay, before I go on to telling you about before I move on to telling you about the exact things that I'm doing in the market right now, okay? And this is really for your good, guys. I'm going to be conducting a free workshop on the 26th of August. That's Tuesday. Okay, so 2 Tuesdays from now at 7:30 p.m., I'm going to be conducting a free 2-hour workshop to teach you how you can profit in this AI era and through this geopolitical turbulences. Because what's going to happen is going to be a lot of volatility, as you have seen this year. Okay, so volatility can be very scary and it can cause you to lose money for people who do not know what you're doing in the market. But for those who know what you're doing in the market, this is the time that you can be making money. Okay, so The link, I've pasted it in the chat. This is by invite only, so you have to fill out the registration form, and the registration link, I just pasted it in the chat. Okay, so this is the registration link, all right? And for those of you guys, I mean, you can save this registration link now, or if not, I will also eventually post it in my Telegram chat. Okay, so this is a free 2-hour workshop. You're going to learn absolutely yeah, it's going to be absolutely valuable for you. You're going to walk away with 4 benefits and more. Okay, so I'm going to share with you the key things that I'm going to cover. Number one, how to position your portfolio to take advantage of Gen AI, right? And the geopolitical turbulences and the market volatility. Number two, it is absolutely critical that in this time you have to build your customized portfolio strategy. There is no such thing. My mentees who are sitting in through this call, they know, they have followed and tried to copy trades, this and that, burned in the market, even burn up to 6 figures. Okay, then they come and learn how to build their customized portfolio strategy. I can tell you that your risk appetite, right, the combination of your risk appetite, your portfolio size, your portfolio goals, your strengths and weaknesses as an investor, etc., is not the same as someone else. You can never play the game the same as someone else. So I'm going to teach you how to build your customized portfolio strategy for the rest of 2025, moving into 2026, how to do that strong, and I'm going to share with you my personal game plan. Okay? Number three, I'm also going to show you my exact 3-step system that I've used, that I fine-tuned over 14 years of investing, costed me more than 80K of learnings, and now supercharging my 6-figure portfolio in a peaceful and profitable manner. Okay, and this is based on the Buffett method, and it can be used for any stock market in the world. And I'm also going to share with you my analysis and outlook of the US stock market, right? And the exact opportunities I'm looking to capture then. All right. So the market is very, very dynamic. I'm going to be sharing with you guys a lot. This is the time you want to profit safely and sustainably. Peace of mind. Okay. So the link is in the chat. I will paste it once again. Okay. For those of you guys who just joined here. Okay. So this is the chat. This is the Zoom link. The Zoom link. This is the registration link, okay, for you guys to sign up. It's on a first come, first serve basis, all right? So you absolutely want to reserve your spot. Okay, now coming back to what we were talking about just now, right? The reason why you want to attend this workshop is precisely because of this. Okay, it is very, very selected stocks that are pushing up the S&P concentration to a record 40%. So you want to be able to select the right stocks that suit your risk appetite, your portfolio size, portfolio goals, etc. All right. Okay, so what am I doing in the markets, right? Okay, let's have a look. Let's have a look. In this top 10 stocks, who do you think tops this? Who tops this? Who do you think, which company do you think is the top company that's pushing up this S&P 500? Can you all put it in the chat? Okay. Before that, while you guys put it in the chat, can you all tell me, okay, who is pushing up the S&P 500? Who amongst these top 10 stocks? But before that, Louis, Junren, healthcare is a very gray sector. Okay, you need to be of a certain risk appetite, all right, portfolio goal, portfolio size, in order for you to enter the healthcare sector. It doesn't suit everyone. Please be very, very cautious. And this is why you want to come for that workshop that I'm going to be conducting on the 26th of August. Okay. Okay. So some people are saying Nvidia, Apple, Nvidia Meta. Send you a message. Okay. I think there is a fake. Guys, be very, very cautious. I think there is like a fake profile of me that is actually even okay. Yeah. Okay, great. Yeah, the Max 7. Okay, now let's have a look. It is none other than Nvidia. Guys, Nvidia has become the first company to reach a $4 trillion market value. This is insane, right? First, it was Amazon, and then by Amazon 1 trillion, and then it was Microsoft 3 trillion, and then now it's Nvidia 4 trillion. But you guys want to be very, very cautious, okay? Look at this. Nvidia AMD to pay unprecedented 15% of China chip sales revenues to US government, just in a snap, right? China chips, boom, your margins are cut by 15%. Not the overall company, right? But a rather considerable portion, right, of the company's revenues. Okay. What has happened? If you guys have followed my Telegram chat, so Jensen Huang, CEO and founder of Nvidia, he actually sold 41 million worth of stocks just on the 8th of August. All right. And before that, the last 3 months, another insider sold $149 million worth, right? And then over the last 12 months, basically the CEO is a net seller, 76 mil. Although it's not a huge percentage of the holdings, but still it's an indication, right? It's an indication, it's a hint for you guys to take some profits, okay? About half a year ago, I did the Nvidia stock dissect, all right? And this has now been uploaded on my YouTube as well, because Facebook actually, now Facebook every 30 days, they remove the videos. So I've uploaded it onto YouTube. You guys can go watch that stock dissect. But basically, you guys will have been sitting on easily 30 or 40% ROI since the time I was doing the stock dissect till now. And if you are smart, guys, you want to be locking in some free money from the market right now. Okay? Okay, so what else am I looking at? Okay, so I'm sharing with you guys exactly what I'm doing in the market, right? This, don't forget, when you want to enter the market, you also need to know how to exit. If not, you're going to wait 10,000 years for your portfolio to be growing at the rate that you want to. You have to learn how to take profits. And every single person, the way that you take profits is very different. Okay, if you do not know how to exit from the market, also come for the workshop on the 26th of August. Every single one of my mentees have their absolute, customized entry plans and exit plans. Okay, so that's what you want to do. So hint, take your profits. Okay. Okay, now Apple. It's very, very interesting. This is so crazy. So if you guys saw, right? Okay, so in total, Apple is going to invest or has invested 600 billion. Okay, so an increase 100 billion, but now it's like 600 billion in total. Okay, investments to build all these new factories and offices, etc. In the US, right? If not, Trump is going to charge them 100% tariffs. That is completely insane. But that itself, because they are going to be migrating their facilities, etc., okay, the prices of their devices are going to skyrocket. So what is happening right now? And I can share with you guys, this is not on the slides, okay? Or maybe let me hold it for a little while, all right? Because I have a very important view of how to play Apple if you want to play Apple. But it's very interesting because, once again, this comes from my Telegram group. If you guys have polled, most of you are actually wanting to buy Apple, right? 36%, so probably like more than 1/3. And then 1/5 says that it's a forbidden fruit. 1/4 says not sure. And then another 1/5 says that this is absolutely drama, which I also think so, because obviously Tim Cook was presenting his 24K goal, 24K goal plug to Trump, okay? Forbidden fruit or not. Now, let's have a little look. I can tell you that, so not too long ago, I actually brought my mentees through also the annual reports of Apple. I can tell you that it is so uninspiring, even the growth. So ever since Tim Cook came on board, so Steve Jobs, he is a very, very visionary person, right? And during the time when, because he's the founder and he's so visionary, during the time that he was there was so many incredible, amazing innovations that were happening. Okay, and all these innovations truly make a difference in the lives of the users. But ever since Tim Cook came on board, he's a very, very operational guy. So it becomes kind of like a stagnation, right? One of the key risks right now, it's lack of innovation, not good enough. And not only that, the cost is going to increase. Okay, cost of production. But right now, the saving grace is what? Sticky ecosystem, strong brand retention rates. All right. But just bringing to your attention, guys, who do you think is the biggest devices player? When it comes to market share, when it comes to, let's say, mobile devices, right? Mobile devices worldwide, who do you think is the largest player? Is it Apple? Is it Google? Is it Huawei? Is it Xiaomi? Who do you think is the largest player right now? Who do you guys think is the largest player right now? Let's have a little look. Guys, who do you think? Oh, I realize that you guys can't see my. Okay, who do you guys think are the biggest device manufacturers and retailer right now? Huh, guys? Can you all type it in the chat? Who? Who? Okay, who do you guys think? Okay, let me just show it to you. All right, it is this. Ta-da! Guys, look at this. Android has more than double the share of Apple. Okay, at least in this devices space. And iPhone itself actually contributes to more than 50% of their revenues. Okay, so actually mobile phones are very, very important in Apple's context. And while it is gaining market share, okay, so it's gaining market share, which is not bad, right? You can see over the years it's gaining market share. But let's have a little look at its revenues. Okay, so look, guys. Light blue is Android. Light blue is Android. It has double the market share, okay, than Apple. And look at Apple's revenue growth. It is so uninspiring. Can you all see? It has literally come to kind of like I would say really kind of like a stagnation. Very, very low growth. Very disappointing personally to me. Okay. Look at the EPS growth. I mean, EPS is still positive or largely positive, but you can see, right? Actually, over the past 3 years itself, very uninspiring. Okay. So this is something that y'all might want to take note of. Having said that, what is my view on this is that now what is happening in the market, people are stocking up their devices because they're expecting like a spike in prices to come because of the tariffs. Okay, so they're expecting 1 year from now, 2 years from now, the Apple devices are going to cost a lot more, right? Because Apple obviously will be passing on some of this increased costings because they're going to be manufacturing, etc. in the US. They're going to pass this on to consumers. So right now, probably you'll see a spike in revenues, like a sudden increase in revenues and profits, etc., in the coming year, right? So Apple could potentially be a short to medium term play. All right. So once again, not every company is for long term play. You have to know, right? So Apple, for example, is short to medium term. Now, does short to medium term really fit you? You have to ask yourself. It goes back to your customized portfolio strategy, which I'm harping on again and again, to people who are learning together with me, my mentees, my followers, okay? Please make sure that you have your CPS, customized portfolio strategy, because I can tell you that short-term play probably doesn't suit many people, okay? Okay, great. Next. Guys, what do you think I'm looking at? What is the company that actually fell 8% despite posting good earnings, like good earnings, beating expectations? Which company actually fell 8% despite rather strong performance? Which company, guys? Which company do y'all think it is? It is none other than... Y'all know which company it is? Can y'all make a guess? Okay, it is this. 31st of July 2025 splattered all across the news. Amazon earnings beat across the board, but shares fall as investors fret about trade headwinds, okay? That was my former employer. I was actually leading a team, in the regional European office some time back. Not too long ago, actually. Okay, so I was there for a couple of years, really into the business to see how this giant works. Okay, so I personally know that it's a very, very strong company. Look, boom. Why? And this, I can tell you, if you are a speculator, you would have been contributing to this dip. Why? Because many people are speculating that the tariffs are going to hit Amazon, right? Could it potentially hit Amazon? Yeah, for sure. For sure. Okay. But long-term wise, all right, long-term wise, do I think that Amazon is actually a pretty strong company? I believe so. Once again, I will upload my past stock dissect and company analysis to YouTube because Facebook took it down with its new policies, okay? But you can catch it on YouTube, all right? So someone who has led a team, leading the regional team previously, I can say that it's a pretty strong company, all right? If you want to know the reasons why, go look back at that video. So, be greedy when others are fearful, fearful when others are greedy. Then again, I ask you, does Amazon suit everybody's portfolio? The answer is no. It all depends on what your customized portfolio strategy is. Okay, so come for the workshop if you haven't already attended. Next, world's largest card processor. Who is that? The world's largest card processor or card distributor, credit card facilitator, card processor. It is none other than Visa, okay? By the way, if you guys don't already know, Visa has completed its 20 billion buyback and it reported another $30 billion new repurchase plan. So this is a very, very strong sign, right? That actually what is happening when a company is buying its own shares back, it believes that its shares are either fairly valued or undervalued at this point in time. Okay, and not only that, it also means that it doesn't see many other opportunities in the market and it really believes in its own growth. If we were to look into the financials of Visa, now Visa, once again, in the past I've covered the stock dissect, so I will also upload that company analysis. But if we were to, Visa is really one of my favorite companies, although it might or might not fit your customized portfolio strategy. Okay, but let me just show you. I'm just going to skip past the qualitative business model. I'm going to skip into financials. This is not what I do normally with my mentees because we absolutely want to go into the qualitative before we go into the quantitative. Having said that, okay, hold on. Having said that, okay, I'm just gonna, for the sake of brevity and time, I'm going to show you guys the financials, okay? Because the financials also kind of shows what sort of growth the company is going through. So let's have a little look. Where is my... Okay. Yeah. Okay, can you guys see the financials, right? Okay, so you guys can see that actually the revenue growth double digit, although the growth has slowed down, right? But it's still a pretty okay double digit amount. When you go into the net profits itself, it has stellar profit margins. Can you see above 50%? Okay, but of course with the impending fine, it's going to be hit, but still it will definitely be able to stomach those fines, right? Regulatory risk. Dividends per share, strong growth, double digit. Okay, what else? Let's look. In terms of its debt to equity ratio, where is it? Debt to equity ratio, very healthy. Okay, so these are just some of the financial indicators that we look at. This is only probably 1/3 or 1/4 of the financial indicators that we normally look at, that I normally share with my mentees. But once again, for the brevity of time, for those of you who want to learn more, sign up for the upcoming workshop. Okay, the link is in the form. Okay, now coming back to my slides, let's have a little look. Yeah, okay, absolutely. Who said Visa just now? Yeah, Visa. Okay. Yeah. My question to you is, and I've been asking you throughout the entire sharing today, are these stocks for everybody, guys? I went through Amazon, I went through Nvidia, I went through Apple, Visa, etc. Right? Are these stocks for everybody? Oh, by the way, I sold a put on Visa. Okay, and don't sell puts if your portfolio size cannot take it. So that's another one, portfolio allocation. Come for the workshop if you don't know your portfolio allocation. Do you think these stocks are for everybody? Yes or no, guys? This is not a trick question. Huh? Do you think these stocks are for everybody? Yes or no? Visa, Amazon, right? Nvidia, Apple. Okay, pardon my terrible handwriting. Apple. Okay. Do you think it's for everybody? The answer is a resounding no. Okay, a resounding no. So you want to be very, very, very careful. Definitely not, because each of you have different risk appetite, risk tolerance, different portfolio horizon, portfolio size, okay, portfolio goals, strengths and weaknesses. So your portfolio allocation, entry, exit plans, etc., is going to be very, very different. All right. So once again, this workshop that I'm going to conduct on the 26th of August on Tuesday to teach you how to profit in this AI era and the geopolitical turbulences. This is for you. If you have difficulty building a profitable portfolio that's aligned to your financial goals and risk appetite, right? You have difficulty navigating the market volatility. You lack understanding of time-proven strategies, investment strategies, struggling to maintain a healthy, balanced investor's mindset, swayed by market news, right, and market volatility. Okay, if you want to learn how to take advantage of the current AI era, geopolitical turbulences, you want to have your customized portfolio strategy, you want to know what stock should go into your portfolio or not. Okay, that's very, very important. Not Visa, Amazon, Nvidia, etc. Okay, tech stocks don't necessarily fit your portfolio. You must know. I'm going to share with you all my three-step system, that I've constructed after 14 years of investing, supercharging my six-figure portfolio right now based on the Buffett methodology. Going to share with you even more opportunities that I'm looking at and the outlook of the market. Absolutely free. Okay. Link is in the chat. You guys know where to find me. All right. So before we go, guys, just look at this. This is very, very sobering. Each time this is the S&P 500, okay, and this is the total market cap. Each time this gap narrows, you can see that boom, there is a correction, right? So this year, actually, April, January, I was telling my students, my mentees, I said, hey, time to take some profits already. And then April crashed here. Okay, now it has come up here. Okay, so this is super, super crazy. You guys want to take note. Very, very sobering. Okay, I've spoken a lot. Can you all type at least one learning from today, guys? At least one learning or one thing that you're going to do from today before we leave, so that everybody can learn. I can tell you that it's very interesting. And the more you put in, the more you get out of this session, right? When you guys share, the more you encourage more people to share. Okay. And then you see what each person takes away from this session. So just a little recap while you guys type it in the chat. Okay. So while you guys type it in the chat, what did we go through? Let's see. Okay. Right from the start, what have we gone through today? Okay, so take your time to type it in the chat. Let me just run through very, very quickly what we went through today while you guys type your learnings in the chat. Okay. And also for those of you who haven't liked and shared this video, you all think you can do me a favor by liking and sharing this video so that more people can eventually watch this, even if they didn't manage to join us live. Because whatever I'm sharing today is very, very important. There are too many people who are part of the greed, right? You know, the greed. You guys saw, right? Market is greedy right now. Many of them, if you're greedy, you could potentially lose money and do the wrong thing. Okay? FOMO buy, panic sell, etc. So just to recap what we went through today. Oops. Okay. We went through market valuations. We went through labor markets. We went through the PMIs, consumer spending, inflation rate. So that's the overall economy, right? There is a gap with the stock market. So then what is driving the stock market, right? We talk about sentiments. We talk about interest rates, talk about tariff revenues. We talk about which are the sectors that are driving, right? The specific sectors, the specific companies. We talk about what I'm doing in the market right now, right? Yeah, okay. So we talk about different stocks, Nvidia, Apple, right? We talk about Amazon. By the way, long ago, if you're invested by the time I shared with you, you are already sitting on 60% profits. Okay. When we entered at 60%. Yeah, when we entered at 160 something, right? Because now it's 220. No, I mean after the correction, 220 something. Yeah. Okay. Visa as well. When I first shared with my mentee, it was 190. That was like last September, October. Okay, that was 190. Now today it's 340. You'll be sitting on a lot of profits if you guys were listening and if you know that it suits your customized portfolio strategy. Okay, so we went through this. Okay, so can you all type like one thing that you have learned from today, guys? Can you all type one thing that you have learned from today? Okay, type one thing that you have learned from today just so that I know I am not wasting my time, just so I know that you guys are learning and that this is actually helping you. You know, type one thing that you guys are learning today. All right. And also for those of you who are new to my community, you can follow me on these different channels. It's at the scroll below. If not, I actually do have a slide over here for you guys. Also, you can just okay. So y'all can type your learnings in the chat and here. Okay, for those of you who are new to the community, you can follow me on these different channels on my email subscription, right? On my Telegram. Telegram is where I do my most updated. I do polls, okay, exciting polls, interesting polls, all the live updates, etc. Absolutely want to follow me on my Telegram and emails as well. Okay, Facebook, yes, but I think many of you, you know that Facebook has changed its algorithm. It's very difficult to find me now. And you also want to follow me on YouTube, right? Because I'm going to be subsequently uploading a lot of in-depth company analysis, market updates, etc. on YouTube as well. Okay, so you can find me on YouTube. All right. Kianwa says self-put on VA. Guys, what else did you all take away from today? I've covered so much. What did you take away from today? Can you all type one thing in the chat that you have taken away from today? Something that you found helpful? Okay, I need to actually jump over to my mentees Zoom right now because we are going to cover even more in depth, and I'm going to do some Q&A. So please, even if you're watching the recording, okay, and now you are not, now you're catching up on the recording, please also just type in the chat one learning from today. It's going to help you so that you don't just sit behind the screen and chunk in information and end up getting confused, but you want to take away one actionable, very good, okay, one actionable thing with you. Okay, so thanks everybody for joining me tonight, and invest safe. Okay, I'll see you, for those of you who sign up for my workshop on the 26th of August. I'll see you then, and for my mentees, I'll catch y'all in Zoom now. Okay, so have a good evening. For those of you who are in Asia time zone, if you're tuning in from elsewhere, then I wish you a good day ahead. Goodbye, guys.